for the loan agreement, again, we got a lot of legalese sprinkled in here, but there are certainly important parts. And this agreement tends to be the most scary one, as you could expect, because that's where we're talking about financial terms. Here, we've got a summary page that'll highlight just key terms of how much they're borrowing, what that loan term rate, and then payments are. What's important here is that the loan starts when the loan is funded to the contractor. So there's two things in here, is that the contractor gets funded directly. So the money doesn't have to pass through the customer's hands. So that makes it easier. And then the start date is when that loan is funded, which is at install. And then following that, 60 days after install is when their first payment would start. So panels are up there. They've got 2 months before they have to start paying on them. They can already start to see the loan, or the utility bill dip down before that. So that works well. Scary page is the truth in lending disclosure. And so this highlights again the rate. We've got borrower contact info here that we want to verify is correct, but the scary part is the rate, the finance charge. And so sometimes people will look at the total amount of like, wait, you said it was $100,000 loan. What's this 116,000? And so this is a common example. If you just sent this over to the customer without reviewing it with them, they'd be like, he told me 100K, it's 116, screw that guy, right? Like, that's interest, right? They're borrowing money, they got to pay interest on it. But this is an important thing to be able to tell customers, is this is a worst case scenario. And so this assumes that they run this loan out the full term. And it also assumes that they don't reinvest the federal tax credit. So we all know that 26% federal tax credit. What that more implies is, it's related to the second section here. And so, when you're talking to a customer, in this case, it would have been like, yeah, your payment starts at $732 and would stay at $732 in this case if you reinvest the tax credit. But if you don't reinvest the tax credit, which in this case would be $26,000, right? If they didn't put that 26 grand back into the loan, if they kept that money, that's fine, but their payment would bump up, because these loans, what's cool about the solar loans is if you were to go say, plug into any loan calculator and say, if I borrow 100 grand at 299 for 10 years, the payment's going to be higher than what this shows. And what's cool about the solar loans is they're structured having it in mind that a customer can get a federal tax credit, and they very, very likely will put that tax credit into the loan to pay down the principal. And so these loans always start off at a lower amount, assuming someone's going to put that in. And I worked for a lender for a while, and it's over 90% of customers do put the tax credit in. And so you can go into it knowing that people will put the money in to keep the payment lower, because it goes straight to principal. And, at that point, you're effectively financing 74 grand, right? So I always like to go over this with people to just show, like, yeah, this is a worst case scenario, assuming you don't put in the tax credit and that you run the loan the full term. You said you want to put the tax credit in because you want the payment lower, right? Yeah. Okay. So you'll pay less interest and you're probably going to pay it off sooner, right? Yeah. Okay. So you'll pay less interest. So this again is worst case scenario, as is this. It's 1021. That assumes you don't put the tax credit in. We have to show that, because it's not a guarantee that somebody's going to put the tax credit in. So we have to show that worst case scenario if they kept that money, right? APR, so the APR quoted always assumes they are doing auto pay. If someone does not do auto pay, that's fine, but their rate bumps up 0.5%. So this would be a 3.49. rate if they did not do ACH. And so you guys will get these people, and you want to tell them too, like, hey, this rate assumes auto pay. I don't like auto pay. Oh, your rate's going to go up. Okay, I'll do auto pay. That happens a lot. And you'll occasionally get people that are like, I don't care. I'm not doing auto pay. They can opt out of that. That's fine. Sometimes people get tangled around the axle on this one where, and I'll read it, like, you are giving a security interest in the personal property. People don't continue reading. They get hung up. They're like, wait, you're putting this against my property? You're leaning my house? No. So these loans are not a lien against the property, which technically would be a defined term, which is capitalized, but personal property is the solar system. So the loan, like the loan is collateralized against the solar panels themselves, not the home. So I guess more directly stated, if somebody did not pay their solar loan, the lender cannot take their home, right? They can only take the panels if they deemed necessary. Just like if you don't pay a car loan, they take your car. Honest truth is that solar panels are really hard to repossess. Like somebody would have to go out and unbolt all the stuff, unwire all the stuff. It takes a while. So if somebody went into default, they stopped paying on their loan. What actually happens is loan companies will get your system turned off. And so now you're fully back on with the utility company again. You get this big fat utility bill. They force people back into paying that way. It actually works really well. There is no prepayment penalty on the loan. None of our loans have prepayment penalties. And this will clarify again for customers. They're financing 100 grand. Nothing goes to them. Everything goes to the installer. Loan start date, we talked about that. This date must be within 180 days. So credit will expire. And so if a contractor took a long time, like if we submitted a deal and they just sat on it, credit will expire in 6 months and credit would have to be rerun. That doesn't happen to us. Our stuff gets installed in about a month and a half. But just knowing this is a normal clause out there that credit will expire for somebody if it took forever. The loan is transferable. So if they sold the property, they can actually transfer this loan to a new borrower. So that's a cool feature. That borrower just pick up where the other customer left off and just continue on with the same payment schedule. And again, this clarifies too that payment schedule again above is worst case. So if they make no voluntary prepayments, but it does have the reamortization like Chris was talking about. And so that's where, again, it assumes that customers are probably going to put that tax credit in. So it starts the payments at that lower amount, which is helpful. So any payments they make before that 18 months are going to lower that payment. And so, if you paid all of your tax credit, that payment is that the amount that we talked about. If they paid more, it'd go lower. If they paid less, the payment would go up a bit because it's factoring in on what that principal remaining is. Auto pay, we talked about that. So now we get into the fine print. So borrower details get listed again, same with the loan details. Then start date, we talked about that before. This clause will detail when the loan payment date starts again. So it just depends on when that loan is funded. We don't have to worry about this so much. It's more of, you could just tell customers it's about 60 days after install is when your payment would start, and that's fine enough for most people. If they're very particular about the date the payment comes out, I always just default to say call GoodLeap. If they're looking at this document, they've already passed credit, they would have GoodLeap's contact info in their email. And I would just say, like, yeah, let's get this started. It takes a little bit to get the project built. Call the lender sometime during that point, and you could just tell them you want a specific payment date and they can work with you on that. Tax credit, again, not a guarantee. You know, they were not financially responsible. Again, pretty standard legalese. Somebody does not have to prepay or make earlier principal payments to the loan, but they can. And this actually just clarifies what I was just saying. If you pay more than, the payments will adjust to a lower amount. If you pay less than 26%, that payment goes up a bit. Security agreement. So UCC financing statement, that is a filing with the county that just says there's a loan on those solar panels. It's not a lien against the property. It wouldn't hold up, you know, any sort of home sale or anything like that. You shouldn't have to talk about this with a customer during the sale, but you may get a call from a customer at some point being like, I'm trying to refinance and there's this filing on the property. Piece of cake, call the lender, they'll pull the filing and the customer can refi, and they can do it same day usually. So no problem at all. These are easy to get updated. It's just a kind of CYA for the lender, just to make sure the county is aware, or any other lender like a mortgage company knows that there is a loan against that system. And more specifically, it's in the case of, you know, if a home gets foreclosed, that the county knows that somebody else is owed money for those panels. After all that, we still are now hitting an intro. So here, this just opens up parties involved, you know, equipment being installed, you know, that sort of thing. Promise to pay, obviously, customer promised to pay GoodLeap for the loan. Payment timing, we talked about the start date. Application of payment goes toward principal and some interest. Interest accrual, it's pretty standard stuff. This references auto pay. Target payment, so that's that 18-month time frame for the reamortization. It's a target balance date and what those initial payments are. So that's all derived from whatever that reamortization amount is. So if they put that tax credit in, that'll determine that figure. Loan maturity date. So again, if they followed the payment time frame, it's that loan term specified. But if they paid more, it would go to principal to get paid earlier. Payment methods, again, predominantly through auto pay. Most customers are doing auto pay. Another clarification: there's no penalty for prepayment. Fees around insufficient funds, like, you know, pretty standard stuff. All right, collateral. So again, the lender is collateralizing this loan against that solar system. And so the lender has power of attorney, you know, over, you know, who ultimately owns the asset until that loan is paid for. And so otherwise stated, the lender could sell the loan, right? Just like a mortgage. If they choose to sell the loan, they can. They've got that aspect granted to them. And again, the system would collateralize that asset or that note. Ownership confirmation. So just you own the property, right? Like, this is your property and you said it is your primary or second home. Let the lender have access to the collateral. So again, like service, inspection, maintenance, things like that. Let's see, no portion of the collateral is good as well. Yeah. So this technically is removable. And as well, there's a clause in here too that you're not supposed to put up your solar system as like table stakes in a poker game or something like that, unless you paid off the loan, right? You don't have access or rights to the collateral until you pay it in full. Install and maintenance is kind of related to the install contract, to where the customer needs to give us access to be able to do the install, right? To make this loan official. And then similar on the property conditions, right? Like LoanPal, GoodLeap is not responsible if for some reason the roof structure is messed up on the house. They had a leak and the roof is rotten. Like they're not responsible for that either. Taxes, again, it's on on the homeowner for any taxes applicable. Insurance, so this is important. So they're buying the system. Obviously, they're taking a loan out on it, but they're buying the system. So it's their responsibility, the homeowner's responsibility, to carry homeowner's insurance on this. Important point is that it rarely makes much of a difference in the payment. If anything, maybe $5 or so a month on somebody's homeowner's policy. So it's essentially negligible to make sure that system is covered. Credit inquiries, they're pulling credit.
Ryan, quick question.
Yes.
Would they have to call their insurance company when the solar system gets installed to make sure that the solar system is insured?
Yep, that's what this section H is about.
Okay.
Yep. And credit inquiries. So when a customer gets qualified through GoodLeap, like when you're in the house trying to make the sale, you run their credit. That is a soft credit check. It does not put an inquiry on their credit. It will not ding their credit. But when that loan gets funded, which is again at install, the lender will pull their credit with a hard pull. And so it'll show up as an inquiry at that point. And the loan will show up on their credit too, right? Like they took out a loan, just like anything. So for anybody that's nervous, I'm like, well, I'm not 100% sure. I don't want to ding my credit yet until I know I'm sure. It's like, well, it's a soft credit check. It's not going to ding your credit. Let's just find out before you go too far down the road and do all this work and research and everything, and then you find out you don't qualify, right? So literally takes seconds to run it, but just know that it's soft up front. It turns into a hard pull at install. And section J is just it's signing off that you are not soon to be or currently in bankruptcy proceedings, or have done so in the past 6 months, right? They don't want to lend to a bankrupt customer. So here's another reference. So grant of security, interest, and collateral. So again, the purchase materials are the solar system, right? So the loan is for the solar system itself. It's not against the home at that point. Indemnification, we know that means hold harmless, and pretty standard legalese. Same with default terms and remedies. So I'm going to breeze through a bit, but it's more of like, yeah, if you stop paying on your loan, here are GoodLeap's remedies in case of that consumer default. Well, I guess at this point we could talk about like they could make the loan payable in full, like due immediately. They could ding your credit. Here's what I was talking about. They could disable the system. A lot of times they can remotely do so. Sometimes they have to come out and throw the switch or disable the switch and lock the panel. Termination. So again, various things could terminate this, but it's really around act of God or slowness in the process. Notices. So yeah, we have all the info up above, but if anything changes, name, phone number, email, address, right? Tell the lender. Same thing too, you can't assign your legal obligation to pay this loan to someone else. You got to pay your own loan. Governing law, again, standard legalese. We get into arbitration here. Jams is a very, very common arbiter. So that's pretty typical. Equal Credit Opportunity Act. So nobody is discriminating against anybody. These credit decisions are solely based on consumer credit, not all the details listed here. Military Lending Act, pretty standard stuff there. Here's all those state-specific disclosures I was talking about. So a couple of us in here would be looking at this and this. I would look at this. Martinez. Get something else. Well, Florida borrowers, right? But otherwise, all this other stuff, it's like, you don't live in Illinois, you don't live in Iowa. Like we could breeze through this stuff. So they just put it in one document instead of having a different contract for every single state. And it goes and it goes and it goes. So signature page. Closing certificate. This one's just an example, but it would summarize those details again. Contractor, the home improvement agreement number is just the loan ID. Term summary. This page and the following again are that 3-day right of rescission. So if somebody changed their mind, 3 business days, they've got that legal right to. That's just a copy. So they'd sign one for themselves, they'd sign another and return it to the lender. Privacy policy and privacy sharing, standard stuff. If you've ever gotten any loan or credit card or anything, this is normal. Membership application. So sometimes these loans are already queued up for some other financial institution. And in the case of a credit union, like in this example, it's PenFed Credit Union, they need a memberization form signed. And so here it makes it real easy that this just gets signed at the time of loan signing too. So they would sign, and now they become a member of PenFed Credit Union in this case. There are a lot of capital providers backing GoodLeap, and so it might be rare that you'd see one of these again. Sometimes there may not be anything in here, but this one is just, you'll know when you open the agreement what's in there. But actually, important point, I need to clarify what I just said. You will know when you open the agreement. You will not be opening this agreement. This one, the loan agreement only goes to the homeowner. But if you're there in the home with them, like you could pull the monitor. It's like, all right, well, let's go through it together, right? We can go through that if you'd like. Some people don't want you to. Some people go line by line. But I always offer up like, hey, I can walk you through this. Make sure you understand everything. I'm not trying to rush out of here. I want you to understand this agreement. You will see the install agreement. So it's just a privacy policy thing that you can't, like the loan agreement does not get sent to you ever. Payment authorization, this is just an ACH form.
So that means they would have had to give her their routing and account number before this contract is prepared?
No, they put it in when they sign the agreement.
Okay.
So when they're going through putting initials or signatures, they'll fill out the ACH form. And again, the payments don't come out until about 60 days after install, but this is just to get it done ahead of time because the interest rate changes if they don't do auto pay. So what the lender does not want is that they get the loan funded and they're trying to chase down a customer to put their auto pay info in. They never do. In this case, it's like, well, if you don't sign it, we're either going to raise your rate or just not fund the loan. So figure out what you want to do. But that's it for the GoodLeap agreement.